that is very spot on. What we have seen is a near reversal in terms of portfolio allocation. A year ago, we had 70% of the investments in equities driven largely by the local investors. However, we've seen a reversal in the sense that we've got foreign portfolio investors accounting for close to 70% of the market activity. The foreign investors typically are long, hold a long-term view in terms of investments, whereas the more domestic investors, who are largely trying to basically recoup some of the losses that they have taken from the equities, have been playing more on the speculative end of the market.
Well, overall, I mean, given the positive outlook for the stock market in the long term, what do you see it taking before local investors are encouraged to dabble in the equity space with more of a long-term perspective before things start running once again?
Yeah, for us to begin to see a lot more long-term investment from domestic investors, a lot has to be done in terms of confidence within the capacity of the regulatory system to ensure that some of the abuses that were evident within the market in recent history is done away with. We would expect also to see proper allocation in terms of asset management by local investors, especially from the retail side of the market, where a lot of people essentially had gone into the market without proper information. That is beginning to change because we've seen quite a lot of, let's call it, people beginning to ask questions, that they're looking to gain more knowledge and understanding of how the market operates. Also, access to financing is also a critical issue.
Mm-hmm.
However, I think the lessons have been learned from some of the experiences of the past year.
And I guess one would assume that it's still hard to be convinced when there's still so much uncertainty around the banking arena specifically. I mean, one potential risk to positive projections lies in the fact that banks may commence their drive for high year-end deposits, thereby pushing up interbank and deposit rates. So what's your outlook in that regard?
Yeah, that's correct. We would expect that the interbank rates will definitely shoot up towards the end of the year, obviously in response to the adoption of the common financial reporting year end by all the banks. That in itself will probably take some liquidity out of the system again, and will probably not have very positive projections in terms of earnings potentials for these banks. And of course, the impact on the market is evident given the fact that they account for close to 55% of the market capitalization. However, we're a bit positive in terms of longer-term outlook for the banks. If the CBN's plans to set up their asset management company is concluded within reasonable time, and these toxic assets are basically taken off from the banks, they would be in a better position to quickly ramp up their earnings potentials and their numbers once again.
I know that.
However, I think the view would be more towards a 12-month to 18 months period.
I know in the past we've asked the respective CEOs of the dominant banks, specifically in Nigeria, whether M&A activity actually stood on their horizons, but the central bank governors made it quite clear of what this industry is supposed to look like moving forward, that they're not going to allow a bank, for instance, to be more than 20% of the market. So if you've got a player like First Bank, UBA or Zenith Bank wanting to acquire, they will not agree to this. What have you made of that announcement in terms of how it's going to affect the playing field and the dynamic within the banking arena moving forward?
The CBN has indeed made that very clear, that they wouldn't support a situation where one single bank basically accounts for in excess of 20% of market share. What remains to be seen, in all essence, in all honesty, is how that is going to play out. Typically, the whole M&A scenario within the country right now is such that one cannot say for certain how things are going to play out. There are a number of hypotheses as to how things will flow. One expects that one group, being the foreign-owned institutions, may want to possibly expand their presence on the continent, on the country, by possibly picking up one of the smaller ones. But for the larger ones, what we'd expect is that probably they would want to stick with their own organic growth patterns, essentially, and not necessarily want to tie up anybody in terms of synergies, arising from systems, processes, people, and things like culture. But largely, that sector, one can only hypothesize as to see how things play out. But we don't expect to see any major transactions, being initiated until after Q1 or Q2 of next year.